Excellent, excellent, excellent. Okay, I'm going to talk today about Nadex binary options. I'm going to give you a little bit of an overview of the platform, what they're all about, how to get started with it. I'm going to talk about some trading strategies that I've been testing with Nadex, and a little bit about my trading plan with Nadex. And I'm going to give you some excellent resources and links that you can use with Nadex. So first of all, a little disclaimer, trading binary options involves risk or loss and is not unsuitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. And always remember that past performance is not necessarily indicative of future results. One of the things just with Nadex, which is a pretty interesting thing, is your risk is capped. And unlike a lot of other trading instruments, you don't have to worry about getting stopped out or a trade running away from you because there's a defined risk and a defined profit. Okay, so what are binary options? They've been called all or nothing trades. If you ride a contract out to expiration, you're going to win some portion of $100 or you're going to lose it all. That means you could win or lose. All you can lose is $100 or win $100 or some fraction of that. And your probabilities determine the spread between profit and loss. If you think that gold is going to be above 1250 by 1:30 Eastern Standard Time, and there's a 70% probability, or the market determines there's a 70% chance that that's going to happen, there's a great probability that the market price for that binary option is going to be $70, meaning that you're going to risk $70 to make a $30 profit on that trade. Conversely, if you felt that the same trade was going to be below 1250 and the marketplace determined that there was a 30% likelihood of that happening, you would be risking 30 to make 70 on a lower probability trade. So what is Nadex? Nadex is a North American derivatives exchange. They've been around for a few years, and they allow individuals to hedge against economic events and price movements. The original investors included the CBOE and Norwest Venture Partners, and it was acquired by the IG Group in 2007 and renamed Nadex. They are based in Chicago, and they are subject to regulatory oversight by the CFTC. That's important because there are a number of binary options outfits around the world that are not regulated. Many of these are headquartered in Cyprus, and it's buyer beware. So if you happen to be listening to this and you are not a U.S. citizen, unfortunately Nadex is only available to United States citizens and subject to regulatory oversight by the CFTC. That's great for Americans. But if you're looking to trade binary options outside of the United States, just make sure you do a good job of vetting the people that you're working with and make sure that they're reputable. There's no broker needed with Nadex. You're trading directly with an exchange, and your funds in your Nadex account are held in a segregated bank account. There's full transparency on every trade. Nadex does not take any market positions, so you're not betting against the house at all. In fact, what they're doing is facilitating a trade between yourself and someone else who has a contrary opinion to your opinion on a particular proposition. Okay, so how do binary options work? Everything starts with your opinion on the direction of on which way you think a market's going to be headed. So you can do your technical analysis. You can use the indicators that you like to use. If you have a strong sense that the market that you like to trade is going to move north or south from a particular reference point, then you can trade a Nadex binary option based on that proposition. And there are a lot of markets you can choose from. There are 9 Forex pairs, major stock indices, E-mini S&P, Dow, the DAX, Nikkei. There's several other markets, indices that you can trade on Nadex. And some of the major commodities, crude oil, gold, corn, soybeans, silver are available to trade on Nadex. So next thing you want to do is you want to select the asset that you want to trade. For example, in the Forex category, do you want to do the Euro USD or the pound dollar Forex pair? You could do the S&P 500 or Wall Street 30 or Dow stock indices, or you could trade a commodity. The next thing you want to do is select the strike time for your expiration. Is it going to be an hourly expiration? Will it be a daily expiration when the market closes, or will you choose an end of week expiration? And once you've determined the time frame that you want to trade in, then you want to determine whether you want to buy or sell that contract, the number of contracts you want to trade. Each one, once again, each contract is some multiple of $100. Decide what price you're willing to pay for the option, and then place your order directly on the exchange as a market or a pending order. You can close your position early if you want to take profits or minimize losses, or you can let your binary option expire where it'll be worth its full value if you're right, or it'll be worth zero if you're wrong. So what do you need to get started with Nadex? How much does this thing cost? Well, first of all, you can go to Nadex and you could open up a 2-week demo account for free, and I'm going to show you where that is. It costs nothing to open up the account. There are no platform fees. There are no account fees. The minimum amount of money you need to fund a trading account with Nadex is $100, and you have a seat on the exchange. The transaction fees are 90 cents per contract each side. So if you trade one contract successfully, you'd have 90 cents to open the trade, and if you come into the money, there would be another 90 cents to settle the trade. The maximum fees are $9 per side for multiple contracts, and that's 10 contracts. If you trade it, so you'd have an $18 round trip on a successful contract if you have 10 contracts traded. And if you traded 20 contracts, the commission, the fees paid would be the same, would be $9 on each side. So there are some economies of scale that you can take if you trade larger contracts positions. And if a contract expires out of the money, you're only charged for entering the contract. The settlement tree, there's no settlement fee. So if I trade one contract unsuccessfully, I'll be charged 90 cents to open the contract, but I won't be charged 90 cents because I lost that particular proposition. So a quick summary before I get into showing you Nadex. Binary options are based on a simple yes or no proposition. And it offers an intuitive way to trade the financial markets. You don't have to count pips. You just basically have to be or count points or work on stop losses. All you have to do is just determine the direction that you think a market's going to go and find the right entry point. There's a limited trade risk. It's capped. You always know your risk and reward before you place a trade. You can benefit from volatility when the underlying markets are quiet. You have short-term expirations. You can take advantage of fast market moves on hourly, or if trading within a day is, fast for you, that's fine. And there's spike protection. You can never get stopped out with Nadex. Your trade is active until expiration. So with that being said, let's take a look at Nadex. And I'm going to start by going to the Nadex website. And in the Nadex website, they have great education in there. You can see all the markets that they trade. So you can learn a little bit more about what stock indices are traded. There's great education. A big library. They have a very active schedule of trading webinars. There are handbooks, there are PDFs you can download. And then finally, when it comes to opening up a demo account, here's how easy it is. You just simply put in your username, and if it's free, it'll be assigned to you. First name, last name, phone number, email address, done. You can have that done within a couple of minutes. And once you submit your application, you just have to be a U.S. citizen. Once you apply for the demo, you're going to have a 2-week demo funded with $25,000 of play money, and it's actually going to be fully functional. You can do anything you could do in a demo account that you could do with a live account. And once you get the hang of it, you can just, click on a button and create a live account. That takes about 3 minutes longer. And you can fund it for as little as $100. And the minute you do that, it also extends your demo indefinitely. So you can still be practicing on strategies in your demo account with your $25,000. And as you become successful in demo mode, then you can start applying some concepts to your live trading account. Okay, another source for information on Nadex is TradingPub, and we have got an expanding library of information available to you on Nadex. So if you're not really familiar with TradingPub, it's a good website to bookmark, because whether you're trading futures, options, all of these webinars, and so there's a wealth of really good information in trading strategies on Nadex, as well as other instruments. And then finally, Raleigh mentioned I published the probability report newsletter. I put this out monthly. And on this newsletter, you'll find a schedule of upcoming Nadex webinars. They're held every Monday, and you can just register for whatever of the webinars that you find most useful. I'll tell you a little bit more about Nadex. I usually feature an article of the month and a webinar of the month, and that comes out every month. So you can keep an eye on that, and that's just another good information, another good source for Nadex information. Okay, I'm going to talk a little bit about my trading plan. I've been on board with TradingPub for a few months now. Years ago, around early 2000s, I had a little money, and I used to trade this. I was kind of self-taught, and I just had a basket full of stocks that I like to trade. I love trading Southwest Bend because it traded in a predictable range from 13,000 to 16,000, and I would buy it at 13, sell it for 16, buy a couple thousand shares, and I had several other shares, and I actually did quite well at it, even though I didn't know what I was doing. I was in sync with the rhythm of the stocks that I like to trade, and if someone started to go against me, I just kicked it out and found something else. Then I got into a brick and mortar business, and at the wrong time, going into a recession. I was the national sales manager for a shoe company, which also was a victim of the recession. And so I put that behind me, and I just got back into trading the markets, and I'm starting with Nadex. I've got a small account. I funded it with less than $1,000, and my daily trading goal is $50 in profit, which I think is reasonable if you're trading with a really small account. For my trading plan, risk reward is key. If I have to risk $70 to make $30, I'm cranky. I mean, I don't want to do it, and that thing had better be a slam dunk. I mean, that thing has got to be just skyrocketing on me for me to want to get interested in that particular that kind of proposition. Because if I have a goal of making $50 in profits, to reach that target on a 2-to-1 risk-reward ratio, I'd have to put $140 at risk to make 60, and that just doesn't make sense. 1-to-1 is all right, but I still want a really strong plan if I'm going to enter into that type of proposition. I get a little bit more excited if it's 1 to 1.5, where I'm risking 40 to make 60. because A, I only have to be right 4 out of 10 times to break even, but I still want a really strong plan. 1 to 2, if I can risk 30 to make 70, I'm excited. And if I'm above that, 1 to 2, if I'm getting 3, 4, 5 times return on investment, I'm ecstatic. I'm just delighted. When I trade Nadex, risk reward trumps rewarded expiration. And I'm going to talk about that a little bit later because I've got some good examples of some trades that I made that were great and a couple where I got greedy where I should have gotten out of. So how do I optimize my risk reward in Nadex? How do I make money in this thing? How do I get that risk reward that I'm looking at? Nadex market orders are based on current market conditions, which means I'm getting into a negotiation with somebody. I've got something I want to buy that somebody is selling, and oftentimes when that happens, you kind of feel like you're on the wrong side of the equation. Risking $70 to make 30 doesn't make me particularly happy on a high probability trade. Really what I want is I want to have a high probability trade with a highly profitable result. And that's like an oxymoron with market conditions in Nadex. But there are some ways you can kind of finagle it. If a proposition has a generally high probability of success, it usually requires greater risk of capital, as I just mentioned. And time decay can also affect the price of a contract. The closer you get to expiration, generally the less attractive the propositions become from a risk-reward standpoint. The further you're out from an expiration, the more wiggle room there is. So you can have time to adjust your risk and reward. But the real answer to me is I want to be able to engage the market on my terms and not their terms. And before I go any further, I want to go back to Nadex just really quickly and just give you a quick overview of what Nadex looks like. This is my demo trading account. Up here on the left, if you can see this okay, there's a menu of the indices that are available for trading. The Forex pairs and the commodities that you can trade. So you can click on any one of these things. I'm going to take the pound dollar, which is one of my favorite Forex pairs, and you'll see that you have a number of expirations in place. There's 7 p.m. to 9 p.m. Eastern time. These are all Eastern times, by the way. 8 p.m. to 10 p.m., 3 o'clock in the morning, 7 a.m., 11 a.m., 3 p.m. Now, typically, I like to trade these on a daily basis. So the 3 p.m. strike is where I like to be. So I'm just gonna click on that particular one. It's going to give me a lot of strike options. So just for the fun of it, I'm going to jump over to investing.com really quickly and pop up the chart, and I find out that it's currently trading around 16,123. So I'm going to remember that. And I love using investing.com as a resource. And I'm going to take a look at something 2.0. Now let's just assume that I want to sell that market. This is an order ticket, and I would click sell, and I want to do one contract, and it's going to fill the market price for that. It's saying that if I want to sell this at market right now, I'm going to be risking $53 to make 47. Now, that could be valid. I'm not crazy about it that far out. I don't want to change it. So you can amend this ticket by just saying, well, you know, I don't want to risk 53 to make 47. In fact, I want to flip the script. I would much rather risk 47 to make $53. And then if I place that order, it's going to be out of the market right now So it's going to sit down there as a working order. It's going to sit there until it fills, or it might not fill. But at least what I'm doing right here is I'm getting that particular contract on my terms and not the market terms, and I like the risk reward better. If I want to take a look at the chart, there's a little icon that'll give you, and I can expand out that chart. And that's going to show me on a 5-minute chart, so I don't want that. I want to go on an hourly chart. And this basically shows you an hourly chart of that currency pair. And then it has a ton of indicators you like to use. Our Bigelow's T-line, which is the 8 exponential moving average. And I'll tell you why I like that in just a second. I like it because it hugs the chart beautifully. And what I can decipher from this is whenever it moves away in either direction from the T-line, so on a daily basis, if I'm seeing this bar and this bar moving away, I know that sooner or later it's going to come back in there. So that gives me a little bit of information about the next day of trading. Same here. Big gap away, comes back and retraces. Here we are up here, moving away from the line. It's due to retrace back to the line. That gives me one piece of information. Another piece of information comes from Steve Primo, who does trades tops and bottoms, and he uses the 50-day moving average as an indication, as a prime indicator for whether the market is bullish or bearish. And if you're below the 50-day moving average, you're on a bearish trend. If you're above it, you're on a bullish trend. So that's a nice indicator. The other one I like goes back to Bigelow, and that's the slow stochastic. And his settings are 12.33 on that. And I'd just like to keep it simple. So what I'm seeing here is a market that's drifting away from the T-line. I'm seeing a stochastic. If it's over 80, you're in pretty much the overbought territory. It's still hanging up there. It could probably on the next bar stay up there, but sooner or later it's going to start to make a move back down out of oversold. So it doesn't have a whole lot of life from my view where it is. For those people that like using the Ichimoku cloud, you can pop that in here and you can sort of take a look off into the future. And the cloud is suggesting the same thing that I was talking about, that it doesn't have much more life in the bullish category over the short term. So there are a lot of bells and whistles, a lot of indicators that you can use with the Nadex platform. Simple, easy to use. Find your market, find your strike point, and you're good to go. Okay, so how do I optimize risk reward? I like to engage the market on my terms. This is a blow up of that of an order ticket that I just popped in there today, and it was for a weekend, binary option on the tomorrow at 3 o'clock. Excuse me, at 4:15 p.m. And the market proposition would have me risking $20 to make $80, and that just does not fall into my risk reward portfolio. I prefer flipping the script so it's easy to edit, and just for the fun of it, I put, no, I'd rather flip it all the way around. I'd rather make $80 and risk $20. Take it or leave it. And that might be extreme, but there's one thing about doing that is it has a great impact on my trading psychology. If I'm trading at market, or if I feel like I'm just on the short end of a proposition, it affects me psychologically. I think it affects most traders that way. If I enter a contract on my terms, my blood pressure goes down. I'm not worried about the trade when I make it. I know why I made it, and I know what my expected reward is, and if it doesn't happen, it doesn't happen. So when I go into the evening, I have a trading checklist, usually around this time of night, and I want to take a look and see how the markets that I follow closed. And I will take a look for probable market direction using the 8 exponential moving average indicator. That's a Stephen Bigelow thing. The 50-period moving average that Steve Primo recommends, and the slow stochastic set at 12.33, which is also recommended by Bigelow. That's the gives me an indication whether the market is overbought, oversold. That's the 8 EMA is the T line. And then I'm going to look at the nighttime. I'm just going to snoop around for low risk and high reward setups if I can find them. And if I'm going to place an order before I go to bed, it's going to be on my terms entirely, which means that I'm probably going to place a pending order that has very low risk, like risking 20 to make 80. And I can sleep pretty well on that. I also take a look at the Nikkei to see if anything is setting up in there. That market closes at 2:25 a.m. Eastern Daylight Time, and if all my indicators point toward a nice directional buy or sell, then I'll place an order in that. And I've actually had some pretty good success with the Nikkei on directional moves, and it's just fun waking up in the morning finding out that I'm up $60 before I get my first cup of coffee. When I wake up in the morning, I check to see if any of my overnight orders are filled. And if they're bracketed, and I'm going to show that here in just a second, I will, I have a filled order. I'm going to cancel the opposing order. I also take a look at the DAX, and I've got to thank Tom Busby for that tip. I saw that reviewing that presentation a couple of weeks ago, and I had to check it out, and I've been doing extremely well with the DAX, so I watch it every morning. I take a look at the pound-dollar U.S. pairing because there's a great strategy around that. In fact, for those of you that have been hanging around all day, Josh Martinez did a great job talking about the London breakout strategy. It's a great Forex trading strategy, and when you get this, the synopsis of this Trade-A-Thon email to you, if you trade Forex, or if you think you're interested in trading in Forex, watch that strategy, watch his video because it's great. In fact, I sit back on my charts, and I'm surprised at the number of days that you can make $500 within a matter of a couple of hours. I take a look at the markets that I trade most often in Nadex, the S&P 500. Gold, crude, and if there's a setup in play, once again, I engage it on my terms. It's not often that I take market orders anymore. I only take them if a stock is running away and there's a short expiration time, and I can just hitch a trade to that rocket and let it take me over the line. That's the only way I'm going to risk $70 to make 30. Okay, and this is the 6 a.m. DAX strategy, and I have to thank Tom Busby for that. I'll show you a trade that I did this morning using that particular strategy. Basically, the essence of this is that this particular trade, the start of the 6 a.m. Central Time bar for the DAX market sets the tone for that market. And when he mentioned that in one of his presentations, I just had to go back and take a look at it on the hourly charts over a month, and I was surprised at the number of times he was dead on right. So I said, hey, if that's what happens, that's a great DAX strategy. It's also a really good binary proposition. If I can catch a trade near the open of the 6 a.m. bar, and that sets the tone, that's going to be a straight up or straight down move, and there's a good probability that I'm going to be in the money. So he mentioned that the 6 a.m. bar is the pivotal point. So let me just go out and take a look at the DAX now. And that's the S&P. There's the DAX. And I'm on an hourly chart. So let's see where we are. Here's 6 o'clock this morning. When that bar started, it shot straight down. That's hit a downward tendency. Now, this morning I was pretty distracted, and I was working on this presentation and a few other things that I have to take care of in the course of my daily life. So I saw that and I took note of it, and then I got distracted doing some other things. Then the 7 o'clock bar retraced, 8 o'clock bar shot up and retraced back down. And the next time I took a look at the DAX was right here, and it had made a move, a pretty aggressive move down. You can see it retrace hour, and I said, there's where the trend started. It's going to take off on me. So I placed a trade right I placed a trade right there at actually a little bit higher. That's 9030. There we are, 9035. I sold the market right here. The proposition that they gave me to when I pulled up that order ticket was that I would have to risk $58 to make $42. Well, I don't like market orders. So I flipped the script and amended the ticket, and I decided, no, I'm going to sell this market for $62. I'm going to risk $38 to make $62. Take it or leave it. And that order wasn't in the queue for more than 2 minutes before it took. And I actually thought, I wondered whether I'd made the wrong decision or not. And what happened was the market jumped up, grabbed my order, and then shot straight down. Within an hour, I was well into the money, and I exited with $62. That is my profit plan for the day. So I didn't even look at the markets in a live account anymore, and that was with my money. When you go back in time with the DAX, let's see, that was 6 o'clock. Let me go back to this last 6 o'clock bar. Just a second. Okay. This 6 o'clock bar was the first bearish bar on this day, and it set the trend for the next couple of hours. If I'd put a sell order right in here, I would have been off. I would have been good by 11 o'clock. With the DAX trade, by the way, I trade Nadex on a very short expiration cycle. Usually 10 o'clock East Coast time or 11 o'clock. I want that to catch that trend on the beginning and get out as soon as possible. So that's the DAX strategy, and I have Tom to thank for that. I mean, with that particular trade, knock on wood, I haven't lost one yet. So it's bound to happen, but I like the odds of it right now. The next one is on the strategy that Josh Martinez talked about this morning, and that was the London breakout strategy. And it's based on a really simple rule. In his strategy, it's all contingent upon the 3 o'clock a.m. Eastern Standard Time bar. You wait for that hourly bar to finish out. It's traded on an hourly chart. You start with based upon the information that the 3 a.m. bar supplies, you set your entry, exit, stop loss, and let that trade run 50 pips, and then with great frequency, you can pick up $500 within a matter of hours. But when he was presenting this, and when I first saw that trade, the first thing that jumped at me, since I'm in the Nadex world, was, my gosh, if the low or the high of the day is established between 2 a.m. and 5 a.m. Eastern Time, and the opposing high or low is between 8 and 2 in the afternoon. That is a binary proposition. It's up or down. The lows on one side of the day, the highs on the other one, or the highs on the beginning of the day and the lows at the end of the day. So as long as I can find a strike point near the low or the high in the morning, and then buy or sell the market based upon the direction it's going, you can run all day long. And I've had a tremendous amount of success with that strategy. So in the Forex world, it's a great way to pick up pips. In the Nadex binary options world, it's a great way to enter a market that has a high probability of moving up or down. And lately, I've been experimenting on a twist of that on that proposition that I'll show you in just a second. So why does that happen? Well, the European market opens at 2 a.m. So there's a lot of trading activity going. At 3 a.m., the London market opens, so it overlaps with Europe. Also at 3 a.m. is the final hour of the Tokyo trading day. There's a tremendous amount of volume of transactions window, and that has a tendency to spike the market up or down noticeably. So when you see that, it forms the high or the low of the day. That's why it happens. And then using that information, if you follow the rule that the corresponding high or low is going to happen between 8 a.m. in the morning when the New York market opens and 2 p.m., that sets your direction, that sets your entry point. And here's an example of a trade that I did. So the market opens at 2, London opens at 3, and I'm watching this market. It sort of chops up a little bit, it chops down. As soon as the London market opens, it chops up to this point, and I determined on this particular trading day that the market high had been established. So here it is around, and I found the nearest Nadex strike point, which is Nadex. The strike points in Nadex for the pound dollar pairing are every 20 pips. The nearest strike that I found that was attractive was the 1714 in there. I got it on this day, risking 60 to make 40, and I took it, and it ran all the way down to a session low. I never had to worry about it, and I pocketed $40. So that was just one example. But if you take a look at the well, you'll see here shortly. I'm going to go into my demo account and show you the pound dollar and a couple things that have happened the past couple of days, which have been a little on the wild and wacky side. In fact, I'll do that right now. Let's see. Okay. So this is the pound dollar hourly chart. And you can see this big giant spike right here. That was actually the close of business yesterday. That's when the FOMC minutes were announced, and the dollar dove and the pound just skyrocketed. And then here's today's trading session. So I'm going to talk about 2 trades, but I'm going to back away from this particular event. And I'm going to go not to, well, first of all, let's take a look at between, there's a 2 o'clock Eastern time. Let me just double check so I can make sure I'm on East Coast time. I need to make sure my time frames are where I want them to be. Nope. I was defaulted to Central Time. Okay. So there's a 2 o'clock bar. Here's a 3 o'clock bar. It looked at the time like the session low had been established there. By the way, this kind of broke my, this is one of the rare occasions that this particular formula broke my rule. There's 2, 3, 4, 5. It doesn't look like a high. That looks like the low was set for the day. I'm thinking the market's going to go up. when in fact it shot down. The low actually got established at 1. At 2, the FOMC minutes happened and it took off. But I'll tell you how I traded this particular day, because I was looking for some ways to really kind of leverage risk to reward this past week. So I was doing some experiments in demo. I'm going to go back to the night before, and you see these bars right here that are all like little dojis where the market's just going kind of sideways, and it's sitting like right around the 16,100 level. What I decided to do was to go up 40 pips to 16,140, and I decided to go down below this area about 40 pips to 16,060. Where is that? There we are. Good enough. Okay, so that's the range, 40 pips either way. The average daily range for the pound-dollar pairing is normally above 100 pips, and lately it's been going up as high as 250 pips. A lot of volatility going back and forth. So at this particular time, the market price to buy this market was risking $30 to make $70 because it was out of the money. And I said, okay, that's fine, 30 to make 70. I like that risk reward, but I want to do better. I want to risk $15 to make 85. So I placed a pending order right here at this time to make for that proposition to buy at 16,140 above, and I want to risk 15 to make 85. Then I dropped below this particular level, and I went down here to 40 pips below, and I decided to sell this market. Now this market was already in the money, so at the time the proposition was I would have to risk 70 to make 30. Well, I don't like that. And my expiration, by the way, is 3 o'clock. So I said I'm going to do the same thing. I'm going to risk 85. I'm going to sell this market at 85, risking 15 that may make 85. So I got $15 risked on either side of this bracket. And I did that with the assumption that between 2 and 5, the low and the high was going to reveal itself. So that if this low, if the market went down to this low point, it was probably going to take this bar out of contention, but it was going to probably take that order, and that's exactly what it did at 2 o'clock. So this order became active. When I woke up in the morning, I saw I had a live order to buy this market at 16,140. So I canceled. That one. So now I've got a live order risking $15 to make 85. And it chopped down, and I was like, oh, come on, this thing is low. It's supposed to go up, and it's not doing anything. It's not doing anything. And I'm going, oh, well, the only hope I have is the FOMC. And then the FOMC report came out. The dollar shoots down. The pound went through the ceiling, and it closed on this hourly bar above my profit market target. I risked $15. I made 85. So I'm going, hey, that's fine. Risking $15 to make 85, you only have to be right 2 out of 10 times. So I'm going, hey, I got lucky on my first attempt. Let's see what happens tomorrow. So now I'm going to take this off the board, and we're going to move ahead in time. So the market closed up here, and I'm pretty happy. Wow. In fact, that was the first time I'd ever. No, actually it wasn't. I had one trade that was actually better. I had one trade where I risked 5 to make 95, and it took. So here we are chugging along, and we get toward, it's around 8 or 9 o'clock, and right in this area right here, I'm sitting right at around, actually it was right in this area right here. I was sitting around 16,160, and I'm going to go, let's try doing the same thing. So I went up to 16,200. And I went to 16,120. So that's where the market was. I was up here, and I'm still playing around with this thing and maybe feeling a little full of myself from yesterday's trade. I said, this time I'm going to see what happens if I buy this market for $10 to make $90. And down here, I really felt that this one was going to be the that was going to take. I risked $12 to make 88. So what happened was the market chugged up here. This trade never happened. I'm sorry. This one up here was 12. This one was 10 down here. This one here didn't happen because it was in the money, and there's no way in the world it's going to let me buy this thing for $10. But so when this trade took in the morning, I had this order sitting there. So I kicked out this order because I don't need it anymore. Canceled it. And what happens? The market chops way down. And by the way, as it's chopping down here, I've risked $10 to make 90. As soon as it crossed 16,160 heading down, I was in the money. I was up like 10, 15, 20, 25, 40, 50. And as soon as I broke through here, I was up around 70, 80.
Oh, that's so wimpy. Come on, give it all you got. Go! Yeah.
Now, I traded this in a demo account.
Oh, that's so wimpy.
And in a demo account, I just decided to let it ride because I had another market, the S&P, that I was trading in that I'm going to show you. I did the same darn thing. I risked $10 to make 90, or no, $11.50 to make 88.50. So I had one huge return on investment. This one was coming in. If I'd been trading this with real money in a live account, I would have gotten out while I was up around $80. The theory being that while this thing is chopping in here, if I don't make it, I have zero. So I stand to lose $80 versus the potential of making another $5. I would have sold out. For the purposes of this, I decided to let it ride just to prove to myself that greed sometimes doesn't pay off. At the 3 o'clock bar, it finished 1 pip over my my sell target. So I lost that, and I finished out 0. And that goes back to my risk reward scenario. I have a target for $50 a day, and anything over, a 1 to 2, if I can get a double or a triple on my money, that's great. In this particular case, I was getting an 8-fold return on my money. Should have taken that all day long. Instead, I let it in demo expire. Live money, I would have never done that. Okay, let me close out of this. And I'm going to go back to my presentation. And by the way, how am I doing for time? Okay. Candlestick pattern analysis. I got 25 minutes. Okay. Basically, I follow a couple of things. I follow Stephen Bigelow's candlestick analysis, and I use his T line, and I use the stochastic indicator set at 12.33. I use the daily charts to make a binary decision or see whether there's a directional move. If the candlesticks are above the T line, I'm in an uptrend. If they're below the T line, I'm in a downtrend. If the stochastics are in an overbought condition or oversold condition, I want to pay attention to that. And also, if the market tends to drift too far away from the T-line, there can be a short-term retracement. If it breaks through the T-line completely, there can be a reversal. So let me go to the S&P and blow this chart up. Okay, here's an hourly of the S&P. This is what happened at, 2 o'clock when the FOMC minutes happened. Boom, it shot straight up. And then down, hard again. So on this particular chart, I need to refer to my notes really quickly. Yeah, I'm just going to talk about one trade on this one. And so, where's the 4 o'clock bar? 15. Okay, there's a 4 o'clock bar. So in the evening, this thing was just chopping along, so just sort of in a resting state, a bunch of dojis sitting up there around from around 9 to 12, and I was looking at this market, seeing how much it had run up. And it was moving up here, and I took a look, and the T line looked like it was just starting to crest, and the stochastic looked like it was an oversold already. It's over 80, but it looked like it was starting a downward slide. And I said, I just think this market's going down tomorrow. So I went down, took a look at the Nadex strike prices, and I found something at 1941, right at this time point, right around, well, it's 10 o'clock, right around 9 o'clock Central Time. I saw this, and the market price for it then was $11.50, and we were sort of in a resting state. I wasn't going to get much more, so I decided to take that market order. So I was risking. I basically put an order in to sell this market down below 1941, risking 1150 to make 8850, and the market overnight just plummeted, shot right through the target. It was never in doubt. And that was another example of where I was able to basically sort of engage the market on my terms. I was taking a look at the directional probability of something happening and going way out of the money in the direction of where I was going and finding a proposition I might be able to catch given the average daily range of a particular instrument. So, I think about that with a pound dollar, it's 100 pips. I take a look, well, what's the S&P? Is it about 20 points? The S&P 500, the average daily range? It's above 20 points right now. So I take that into consideration and find a strike that's attractive. And as it comes down toward this point, I'm in the money. I'm in the money right here. I'm getting 2 to 1, 3 to 1, 4 to 1, 8 to 1 on my $11 risk right at this point. In this particular case, if I were trading with a live account, I'd let it go because this thing was gapping down big time. It was a freight train you couldn't stop, and you can see how it continued its downward path. So in hindsight, it made me look pretty smart. If I would have played out this day perfectly right, this one here paid off $88.50. I would have gotten out short like around $85. I would have been up $170 versus $22 risk. That's not a bad risk reward proposition. So it is possible to make a little bit of money on trading a small account in Nadex. And here's just another little chart of the candlestick analysis. Taking a look at this particular chart, the screenshot that I took, you can see that the market does a really nice job of following the T-line, and I like that. That's, if it's hugging it closely on a daily chart, it stays likely to be in the direction of the trend. If it gaps away, this is an area where I'm going to be cautious, because I know that sooner or later it's going to come back up. And it's actually not a bad day to test some of these crazy little strategies where I'm risking 15 to make 85. Going back to that 15 to make 85 thing, so in the past 2 days, I've had 4 fills that were 10, 2 15s, and one that was actually 5 to make 95 on the S&P 500. And that was the day that with the FOMC minutes. I just crushed it that day. So, you know, you only have to be right 1 out of every 10 times. And this time I've been 4 right. Maybe I'm just lucky. But what I'm going to be doing in demo is charting this particular strategy where I bracket the pound-dollar pairing, because if the low or the high does happen between 2 and 5 in the morning, there, you know, I'm going to see how the results are. Maybe next month on the TradingPub I can actually publish them. Okay, in summary, Nadex binary options can give you a trading edge. If you've got a good high probability directional strategy, Nadex can make you money. When I listen to the webinars that we do on the Trade-A-Thons and some of the standalone events, I do it with a little bit of a filter. I want to learn about this option strategy or this Forex strategy or this future strategy. But every once in a while, like Tom Busby talking about his DAX proposition, I come across something that has a very, very binary proposition to it. And when that happens, I have to take it into test and try it. And if it plays out, then it's another strategy that I can add to my Nadex trading arsenal. Your risk is defined. A trade cannot run away from you. You don't have to worry about stop losses. That vocabulary doesn't exist in the Nadex binary options world. You can see a trade through expiration, or you can get out early. I would have done a lot better in my demo account if I would have gotten early at 80 instead of trying to reach for 90. There's a low capital investment. You can open an account for as little as 100. Good luck with that. I think it's a pretty low amount, but you know, you can do it if you want to. You can't get stepped out, and it's simple and easy, which pretty much is in sync with my personality. That's pretty much all I have on Nadex. What I'd like to do is sort of address any questions that people may have, and maybe I can answer them. Thanks, Steve. So out of curiosity, type in a yes if you're a U.S. resident. Good deal. So we have a handful of U.S. Residents here. You can go to nadex.com. In fact, Yana, do you have a link to our Nadex library? Yeah, if you can post that. We have a Nadex library that can help you with that. Also, you can go to nadex.com, or Yana might have a link to sign up for a Nadex demo account, and it just couldn't be easier. If you sign up for that, the platform, you'll know it literally within a half hour, and you can start trading right away in demo mode. And after 2 weeks, during that period of time, you'll get a very nice call from an Nadex account rep. Their customer service is excellent, and you can fund it for as little as $100. And I kind of recommend that because once you fund a Nadex account and you place one trade, your demo account is indefinitely in play. So you can trade all kinds of strategies when you see a binary proposition. Run 20 trades with it, gather your stats, and if you like it, it's another way to be able to trade and not worry about the things I mentioned about being stopped out and other things. Any other questions? All right, folks. Well, listen, I'm going to hand the mic. I'm going to hand the mic back to Raleigh. It looks like it's been another good day of trading education.
Hey, Cam, thanks a lot for jumping in here and sharing with us your experience, you know, as just a normal retail trader like the rest of us here in the room. And Cam, as he mentioned, has been trading the Nadex